If you're in the hospitality industry, particularly hotels, you will have noticed that the insurance market is quite different than it used to be. I'm going to take a few minutes to share some of the insights that could truly make a difference in how to qualify for better rates, better carriers, and reduce your risk in the eyes of an underwriter. I've got some fresh ideas and strategies that I believe can help us all stay ahead of the curve. Let's take a look. Okay, so let's take a look and see what's going on. So, over the past few years, many industries, in fact, most industries have been hit by what's going on. And hospitality is one of those industries that's been hit the hardest. You're seeing your rates have been locked up. You've been seeing them increase every single year. You're starting to see non-renewals and coverage denials happening. And this is happening more and more frequently to the point where some are shopping every other year out of necessity. And so that's led to many insurance companies having left the industry altogether and will not write hotels at all. So it's a lot of things happening at once. But to get more specific into some of this, your property rates in part have been pushed up because of regional claims. And so every area of the country has different things that affect your rates when it comes to claims. So Florida may have hurricanes. Indiana and Ohio are going to have tornadoes. And so when you have a number of claims that are higher than normal, you're going to see the rates increase because it's happening at a more frequent rate, which it is. And so because of that, you're also seeing costs of materials and labor increase as well, just based on the demand alone. On top of that, you're seeing inflation increase as well, as it has been the last couple of years. If you've been paying attention to the news, that's been pushing things up even further. So this is all pretty basic, easy to understand, but where it gets more interesting is reinsurance. So your insurance company insures you and insures your property, but insurance companies buy insurance for their insurance. So typically, they do this to keep your rates low and to add an extra layer of protection. Every insurance company is going to keep a certain amount of reserves on hand in case something catastrophic happens. But as an extra layer of security, they also buy reinsurance from other carriers. And so the reinsurance rates have been increasing as well due to the factors that we've been talking about. And so when reinsurance companies raise their rates, then guess what? That cost is then passed on to you. So you're seeing your insurance carriers increase their rates on their own, but separately, the insurance they're buying is increasing as well. And so they're passing that on to you in addition. And so you're getting sort of double hit there. There's not really anything anybody can do about that. It's just how it is. Lastly, your Google reviews are affected by this as well. And so insurance companies have started to weigh your Google reviews. And so they'll go and see, okay, are your Google reviews good? Are you responding to them? Are you above a 3 or a 4? What story do the Google reviews tell us? And so that's another thing that carriers are looking at. And so in addition, there's certain things that are affecting these on an individual basis as well. And so when an insurance company comes out, they're going to look at your building. They're especially going to look at the condition of your roof. They want to see the parking lot. They want to see if there's potholes everywhere. They want to see if things are up to date. They want to see if it's well lit. Insurance carriers are increasingly preferring that you do not have exterior doors. Now, that's not something that every hotel owner can control. And so there's other things that you will need to do well in order to become eligible for the best plans out there that you would qualify for. Self-closing doors versus regular doors, electric key cards versus keys. Your average nightly room price has become increasingly important as well. There are some carriers that won't write hotels if the room is costing less than $50 a night. There are some that won't do less than $70. There are some that won't do less than $125. It all depends on the carrier. And so the higher your average nightly price is, the better of a carrier you may be able to get into. They're all going to want to see emergency responses posted. The annual occupancy has become more important. Used to be 40% could get you into a half-decent company. Now that rate has increased to 50, 60, 70%. Some require that the occupancy rate for the year be at least at 70%. Any franchise requirements are going to be considered. They want to make sure you have good security, so make sure your alarm systems are up to date, that your cameras are on, you got deadbolt locks in each room. They're also going to be looking at your long-term residents versus nightly customers. Now, I know franchises typically do not allow this, but if you have a hotel with long-term residents in it, that's something that is now going to make you ineligible for a number of companies. In fact, most are not going to allow this. And so that's something you'll need to consider. Can I do without my long-term residents and move strictly to nightly customers? And we've already talked about the Google reviews. So some security questions that they're going to ask about is, how are your staff being trained to handle security situations? Do you have meeting to discuss your weaknesses? Do you have written policies in place? Do you have cameras covering any trouble spots? Are you keeping your recordings? What sorts of locks are you using? Like we talked about, are you willing to forego having long-term residents in your hotel and switch to a strictly nightly basis? And do you have adequate lighting? So what can you do? If you are trying to qualify for coverage, there's things you can do. If you're trying to reduce your costs, there's things you can do. The most obvious one is, if you have coverage, increase your deductible. Now, this may not always be an option for you. There are some carriers that are enforcing a 2% wind and hail deductible mandatory on a hotel, which can be significant. 2% does not mean a 2% cost off the claim. It means 2% of your building. So that can be a very, very costly claim if that's something that's being required of you. But I expect we're going to see more and more of that. Increase the ratio of nightly guests versus long-term guests. In fact, I would say no long-term guests at all. Only nightly guests. And if it's going to take some time to get the maintenance of your building up to date, at least build a timeline on how you're planning to do it. If your roof is showing some wear, okay, how are we going to get it there? When are we going to replace it? When are we going to update things? How is it going to be done? If you can show that you have a serious maintenance plan to the carrier, that may open up some options for you. So when you're reviewing a service timeline to share with the company, what can you put on there? First and foremost, your roof updates. Make sure that you have everything that the company is asking for, that it's within a certain date range if they're asking for that. If not, review with the carrier what your plan is. You'll want to set up annual or semi-annual property inspections. The carrier is going to do this on their own, but anything you can give in addition to this is going to help. Sprinkler main drain tests are going to be something that they ask for as well. They want to know how your sprinkler system's working, because that risks a significant claim if something goes wrong with your sprinkler system. Switch to key cards. Any building upgrades you can make. Post all your emergency exit paths if you haven't, and make sure that your security is up to date as best as you possibly can. Like we talked about with the Google reviews, insurance companies are going to ask, if they look at your reviews, if they see some negative, how are you responding to it? What are you telling your critics? Are the criticisms valid? What are you doing to fix it? They're going to want you to be at least at a 3.0 Google review average, but I would strive to be at least a 3.5 or a 4 if you can. Typically, when people leave reviews at hotels, they're going to be on the negative side. So the more you can do to incentivize your happy guests, the better this is going to be. So get your Google reviews up to at least a 4 if you can. So what can you do next? Well, you're going to want to find an agent who understands this market. You're going to want to find some carriers that are willing to work with you on the coverage that you want. If you're willing to take a higher deductible on wind and hail, you're going to have more options. If you're willing to take the steps needed on security and everything else we've talked about, you're going to have more options. But you're going to want to talk with an experienced agent and find a market that will be able to fit what you're doing. And it may not happen at once. It may be a multi-step process to get you there. But we can certainly help with that. Our information is right here. And that wraps things up. Remember, the goal is not just to keep up, but to set the pace in this dynamic hospitality industry. If you made it this far, thank you for your time. If I can help you with your particular situation, please reach out to me. Link is in the description. Best of luck to you as you push your business forward.